Last week, I made a video on support and resistance on my YouTube channel. And in that video, I discussed about a technique based on Fibonacci retracement. And after that video, many people have requested me for an exclusive video on Fibonacci. So that is why in this video, I'm going to discuss about how Fibonacci levels can act as a magic on your chart. So today, I'm going to discuss first what is Fibonacci. Second, I'm going to discuss about the types of Fibonacci. Third, I'm going to discuss how to use Fibonacci. And fourth, I'm going to discuss about the Fibonacci strategies. And fifth, I'm going to discuss about the entry triggers and stop loss placement. So these all the points will be discussed in today's video. Okay, now before we start with the topics, just wanted to inform you all that this week we have started with our first batch of webinar on learn how to read price action chart like a pro, where we discuss about the pre-market and end of the day chart analysis of Nifty Bank Nifty. Many people have attended this week's webinar, and next week also again we are starting this webinar for next week's pre-market and end of the day chart analysis. If you are interested, you can enroll for it. So first let us discuss what is Fibonacci numbers. So what is Fibonacci? Fibonacci is something, first it was invented by an Italian mathematician many years back. So what it says that Fibonacci is something which is there in everywhere in the nature. Whether you take it on flowers, whether you take it on fruits, even if you take it on human body, whether you look at the human body or human hands, or even if you look at the human face, everywhere there is a Fibonacci ratios. So that is what, when Fibonacci became so powerful, people started thinking that why it should not be used on trading also, why it should not be used on price action charts. So that is how traders also started using Fibonacci numbers on their price action charts. And most popular used Fibonacci numbers are 0.382, 0.50, 0.618, and 0.786. So these are the most commonly used Fibonacci numbers. So this is just basic about the Fibonacci, because in this video, I'm not going to discuss too much about the how these numbers are created, everything, because I'm sure that most of the people who are watching this video, they have not come here to do the research on Fibonacci numbers. Rather, they came here to know how to use Fibonacci on the charts and to know about the Fibonacci strategies, right? So now we'll not waste much time on research things. Rather, we'll use it on the chart and we'll see how it can help us in taking the best trades. Now let us discuss about the second thing, that is the types of Fibonacci. So there are many types of Fibonacci, like Fibonacci retracement, Fibonacci extension, Fibonacci application, Fibonacci fans. So there are so many things, but the most popular Fibonaccis are Fibonacci retracement and Fibonacci extension. Since I don't use Fibonacci extension, I use only Fibonacci retracement. That's why in this video, you will see me discussing only Fibonacci retracement. Now, for example, look at this chart. I'm going to play the replay button to show you that what is the use of Fibonacci retracement. You can see that market is going in a strong uptrend, right? It is going in a strong uptrend. You can see from this chart, and you know that when it is in the strong uptrend, where you will enter. This is the impulsive move, right? Where you will enter. Will you enter long here? Will you enter long here? Because you can't enter long anywhere on this candle now, because it is making a parabolic move. When it is parabolic move, you should wait for a retracement, right? Then chances of bouncing the probability higher. So how to know where is that place price likely to bounce? So once we have identified the swing high, we will draw a Fibonacci from one swing to another swing. One swing is this candle low and next swing is this candle high, right? So once you have plotted the Fibonacci levels, then you will wait for price to come to that Fibonacci levels, where price, once you see the bullish price action, then you will take a long position expecting price to hold that level so that you can book your profit, right? So that is what, instead of going long here on this kind of parabolic move where your stop loss is going to become very big, instead of that, waiting for price to come near the retracement, that is where price likely to make a bounce. So that is the use of Fibonacci retracement. Fibonacci retracement and Fibonacci extension, right? Retracement, now you have learned, that means where price likely to take the support, that is the retracement. Now what is the extension? Extension I don't use much, but still for your understanding, let me discuss what is the extension. For example, on the retracement, you have taken a long entry, right? You have taken a long entry. Now you should know where to exit, right? Because you can't hold on to trade forever. You have to exit somewhere at the profit. So what is that extension will tell you? That extension will tell you that where price likely to take resistance and reverse. That is called as Fibonacci extension. So Fibonacci retracement is where price likely to take support, and extension is where price likely to take resistance. And once you know the extension level, then you can book your profit where price likely to reverse. But as I said earlier, I don't use the extension in my trading. Rather, what I'll do, I'll follow risk reward of 1:2, or what I'll do, I'll mark the previous swing high, and that is where I book profit. So it's up to you whether you follow swing highs or you want to use the extension. Okay, now let us discuss about the next point, that is how to use Fibonacci, right? It is very important to know how to use Fibonacci, because I've seen many people even don't know how to exactly draw the Fibonacci levels and which are the most important levels. For example, I'm using currently TradingView chart, and you can see that already I have Fibonacci retracement on my toolbox. Otherwise, you can get Fibonacci from here. So once you click the Fibonacci, it will come here, and Fibonacci is drawn from one swing to another swing. People who are experienced in trading, experienced in price action, they already can easily identify swing highs. But people who are very new to trading, very new to price action, for them maybe it is little bit difficult to identify the swing. So that is why I will show you some simple technique how you can identify swings on your chart. Before that, let me show you the settings so that you can make the same settings on your chart. So once you have marked the swings, for example, I marked the swings, then you can see that if you go here, then there is a settings, right? Click on the settings, and once you go to the settings, it will show you the number. Remember, so there are so many numbers. The most powerful numbers are 0.382, 0.5, 0.618, and 0.786. But if you ask me, I most commonly use 0.382, 0.5, 0.618, but 0.786, I normally don't use it. Why? Because if market doesn't even take support near the 0.618 and it is going below that, that means most likely it is not a retracement, it's a reversal. So there is no point in going with the direction when the trend is reversing, right? So that is why I don't use 786 on my chart. I give more importance to 0.5 and 0.618. 0.618, also known as golden ratio in Fibonacci numbers. So I made some settings like purple color, which are the important. So that's why you can see that I have only 3 lines. First line is the 0.382, second line is 0.5, third line is 0.618. So because I made it with different color, purple color, it helps me to know which is the most important level on the Fibonacci where I wait for the price to pause. Okay, now we have learned how to do settings on Fibonacci. Now let us discuss how to identify swings, especially for people who are very new. Okay, now the most simple way to identify swing highs and swing lows are on your chart, look for at least 5 candles, any time frame. For example, this is one candle, this is the next candle, bearish candle, that's why I'm showing red. And third candle, assume that this is also bearish candle, okay? And next, fourth and fifth candles are like this. You can see that this kind of 5 candles you have seen on your chart. When you see this candle, 2 candles on the left and 2 candles on the right, which should have made higher wicks, okay? So you can see that 2 candles on its left have a higher wicks and 2 candles on its right have a higher wicks. So if you see this kind of setup, that is the swing lows, okay? So that means the candle, 2 candles on the left and 2 candles on the right, if have a swings higher than this. Sometimes it can happen that candle may not have a swing highs, rather it has a same wicks. For example, this wicks almost matching this wicks, that is also fine, okay? Not necessary it has to be above. Sometimes you can see that this wicks almost near to that or matching, that is also fine. But only If you see that this wicks is like this, then this is not a swing low. Then this becomes your swing. Same applicable in the uptrend also. How to know the swing highs? For example, if this wicks and this wicks is lower than previous 2 weeks, okay? So this candle, when you see it, this candle and this candle have a lower wicks, that is your swing. And as I said earlier, if it is not lower, at least somewhere near to that is fine, or matching also fine, but it should not be bigger. If it is bigger, then this candle is not your swing high candle. This candle becomes your swing high candle. Now I hope you have understood how to identify swing highs and swing lows on the charts. And now we'll discuss about the Fibonacci strategies. Instead of using blindly Fibonacci, if you want high probability, then you should have some confluence along with the Fibonacci. That means Fibonacci with any other levels, if it is matching, then it becomes higher probability. Okay, now for example, look at this chart. This is the 21st December chart. On this chart, I have plotted only 20 MA. Instead of blindly using Fibonacci, if there is any confluence along with the Fibonacci, then it becomes high probability. For example, you are a fan of 20 MA. In that case, I suggest you can use Fibonacci along with 20 MA. For example, now let us see where is the swing highs and swing lows. It's in the uptrend. So one swing low you can see here, because above this candle on the right side also 2 candles are above this. It doesn't have wicks, doesn't matter. If there is no wicks, then body is important. This body is higher than this body. This also have higher body. This also have higher body. This also higher body. So this becomes a swing high. So what is the next step? I said next step is we will plot 20 MA. You can see that I have plotted 20 MA on the chart, right? So let us mark from this swing high to this. So you can see that when I mark from this swing high to this swing high, it took the support near that Fibonacci retracement, but it doesn't have 20 MA, right? Now again, let us mark from next Fibonacci. Next Fibonacci level is this swing high to this swing high. So let us mark this from this swing high to this swing high. And you can see that along with Fibonacci here, where candle took the support, same time, there is a 20 MA support also, right? That becomes your high probability because you got entry based on your sloping 20 MA. Same time, there is a Fibonacci retracement support also. So that is the one strategy where combining Fibonacci along with 20 MA. And now next strategy is combining Fibonacci along with pivot points or CPR. For example, you can see that on 12th December, this is the swing high, this is the swing low, right? So we mark that level. You can see that it took the resistance near the 0.5 and started coming down. Same time, it had a CPR also. When CPR and Fibonacci numbers at the same level, that becomes high probability. So that is what, if you are a fan of pivot points and CPR, there are 2 confluence, that is Fibonacci, same time pivot points and CPR. And the third strategy is using Fibonacci along with the swap zones, which is one of my favorite. That means same chart, only 12th December. You can see that there are series of wicks here, right? After that breakdown happened. So you know that what is swap zones, which we have discussed in our earlier video about the support resistance. You can watch it on my YouTube videos. So when we draw that swap zones, which is a strong resistance, when price again meets that swap zones, that is the place where price likely to again make a reversal. So once we have marked the swap zones, let us draw the Fibonacci, and we have drawn the Fibonacci, and you can see that along with Fibonacci also there is a swap zone which is making a high probability trade. So these are the 3 strategies which I wanted to discuss, where instead of using just Fibonacci, you can use Fibonacci along with 20 MA, you can use Fibonacci along with pivot points or CPR, you can use Fibonacci along with swaps. And next one is we are going to discuss about the entry trigger. If I look at the same chart, for me, entry trigger is only when candle makes a proper bearish candle, bearish engulfing candle. That means if previous candle was a pin bar, doji or a bullish candle, the next candle, when it engulfs the previous candle, that is called an engulfing candle. It can be bearish or bullish. If candle is bearish, then it's a bearish engulfing. If candle is bullish, that's a bullish engulfing. So that is one of the most powerful entry trigger when you are using Fibonacci. Now let us discuss the last point, that is the stop loss placement. Okay, when you want to place the stop loss, there are two things. One is, for example, in this chart, you can enter short here when it comes to the strong resistance, that is 0.5 and 0.618, which is a strong resistance I said, right? For example, you can see that it made an engulfing candle near the 0.5. In that case, your short entry becomes here and stop loss is above 0.618, because that is what, if this also doesn't hold this level and price is going up, that means it is not a retracement, it is likely to be a reversal, right? So in that case, if stop loss hits, take the stop loss and close the trade. Don't try to fight with the market. So that is what one of the things. Another thing is, for example, when trend is very strong, in that case, you will not see price even coming near the 0.5 or even 0.618. It can reverse even directly from 0.38. For example, look at this chart. Trend was very strong. You can see that candle even did not touch 0.5 or 0.618. It reversed from 0.382 only. So in such case, what I suggest is only go for half position. Okay. If it makes a bearish candle, don't go with the full position, because your stop loss should be here only, above 0.618, right? So what I suggest is go for half position size and see if price again comes back to 0.5 or 0.618. In that case, again, you can add remaining 50%. So that is how sometimes price can reverse from 0.318. Then don't go with the full position. Only add to the position if it again come to 0.5 or 0.618 and then starts making a bearish candle. That's about this video where we discussed what is Fibonacci, types of Fibonacci, how to use Fibonacci, Fibonacci strategies and entry triggers and stop loss method. And I hope you have learned something new from this video. And as I mentioned earlier, next week our second batch is starting on pre-market analysis and end of the day chart analysis. You can check the link below this video. If you are really serious about learning price action on Nifty Bank Nifty charts, then you can click the link and you can enroll for next week batch to learn more about the price action. So that's it, guys, from my side. I'll see you soon with a new video. Until then, bye and take care.